Ms. Kochhar, thanks for joining us right here at ET. Now, the Modi government has completed 100 days in office. What are your thoughts on the performance of the government so far? What are the key hits, and do you feel they've lived up to the expectations of corporate India?
Well, I think it has indeed lived up to its expectations, to the extent that what can be achieved in 100 days. I think clearly they've laid out a clear commitment to growth, a clear commitment to ease of doing business, a clear commitment to administrative efficiency. A lot of priorities for growth have been set out, the direction has been set. So I would say that the first 100 days have clearly set the foundation for the growth and action to follow.
Plenty of action to follow indeed, but you were one of the elite panel of Indian CEOs who actually accompanied the Prime Minister on his rather successful Japan trip. Fill us in on your meetings with Japanese investors. Are they looking at India any differently? What is the kind of investor sentiment that FIIs now have towards India, at least at this point in time with a change in guard at the center?
I would rate that trip hugely successful. Of course, I think a lot of that success comes out of the personal attention that Mr. Modi put himself behind that visit. But talking about the Japanese investors or investors in general, I think currently there is a lot of interest about India. Compared to a couple of years ago, as we saw the interest dipping, there is a big interest that has come back for India. Everybody is very eagerly awaiting to see India get back on the growth path. And I think, in Japan, the bigger success was that one could clearly identify what are those opportunities which could be win-win for India and Japan. So whether you talk of high-tech manufacturing, they have the technology, India could offer the technology, the manufacturing base. Similarly, opportunities on the side of heavy-duty infrastructure, a huge amount of investment opportunities for those investors who have a lot of liquidity but are looking at investable opportunities. So clearly identifying those areas which could be win-win for both countries turned out to be a huge success.
All right, from the report card, let's really turn focus to the domestic macroeconomic trends. Barring the IIP and the inflation data, that's a little worrying today. GDP growth has really started looking better. People think this is a cyclical uptick. Do you expect a further upside to growth as we enter the second half of this year? And according to you, what factors will really help kickstart the whole momentum in a big way?
I think the GDP growth for FY15 is definitely going to be higher than FY14. Maybe the Q2 numbers, would adjust a little bit compared to Q1, but then again, you would have the momentum picking up. Clearly, one is momentum coming back in the manufacturing side. Secondly, momentum coming back on consumption because of improved sentiment. So I think these are the two factors that are really driving growth. While, the headwinds in a way would be in the form of agricultural output given whatever happens to the monsoons. But overall, I still feel that we would end the year at upwards of 5.5%.
Right. Inflation pressures still remain though, Ms. Kochhar. Despite CPI reaching the RBI's glide path of 8% for this year, do you believe policy rates will remain high for most of this year and even next, given the RBI's commitment to reach 6% retail inflation by 2016? What are you expecting from the policy statement that's due on the 30th of September?
I think RBI has very clearly stated that, they are looking at reaching the targeted levels of inflation. While one is the 8% target by March 2015, the next one is a 6% target for FY16. Clearly, while we've started making a movement in that direction, I think there could be some upside, risks to the FY16 target. So I think given that, clearly as of now, the interest rates and RBI's approach would be a wait and watch approach. I'm not saying that for the next 2 years interest rates won't change, but in the next quarter or a couple of quarters, I think interest rates will remain more or less where they are.
Let's shift focus and talk about ICICI Bank as well. Could you give us a sense of how credit growth, especially on the corporate side, is picking up? What level of growth are you looking forward to for the year? Most banks are saying that even 15% growth looks difficult for this fiscal. How is it looking at ICICI Bank?
Well, Well, currently, the most part of our growth is really coming from the retail business. We are actually seeing robust growth there. In that business, our book is growing in excess of 20%. As far as the corporate side is concerned, while there is some demand coming back in the form of working capital, but clearly, I think new projects and investments in new projects will come only with a lag. So, currently we are focusing more on retail growth, and gradually as the growth on the corporate side comes back, we will participate in that as well. But we think that while the system could grow at about 15–16%, we at ICICI Bank would grow at least 2 to 3% higher than that. So we are therefore working at expecting a growth rate of almost around 18% for ourselves this year.
While at growth, let's also talk about fundraising plans. You had mentioned that ICICI Bank will raise about 500 crore rupees worth of infra bonds. What has the response been like? Will you be tapping this route for raising funds further? Are you looking at any other fundraising plans at this moment, ma'am?
I think this is a very efficient fundraising opportunity that has now come about. These are long-term bonds that the banks are not allowed to issue. They are free from SLR, CRR requirements. So we've really been one of the first ones to take advantage of this opportunity. We have already raised 4,600 crores worth of these bonds, and clearly going forward we will actually tap into this opportunity more and more.
Ms. Chanda Kochhar, thanks very much for being with us right here on ET Now, exclusively on your channel, talking about her bank, the macros that are perhaps on the mend as well. Thanks very much for being with us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.